but there's no way of knowing who's going to get there first. But this is clearly on the map, very clear on the map. Can't mistake it, and neither can you mistake this area of low volume. So the question is, what's going to happen first? Well, let's take a look and see what actually did. As the Dow continued to rally up this morning, it reaches 581, while at the same time the ES, it's just above 23.25, and it's right at 23.25, okay, at the high there. So the Dow reaches it first before we get into that area of lower volume, and we see sellers entering into the market. Now it generally is going to try to test that. It does. And when it tries to test it over here, it never makes it quite so high. Now notice this. The Dow fails to make a new high. The ES, on the other hand, right in here, makes a new high. Okay? It makes a new high at 23.50, but the Dow fails. When that happens, the markets respond. You didn't have any more buyers on the Dow, and the Dow takes the entire market down. And down it goes with a vengeance. Now, where was this market going to find some support? Let's take a look at the profile again. To find out where the ES is going to go, if we look at this profile, which again just takes us into the middle of December, yesterday there, or pardon me, today, it moved all the way down to below 85, and then stops right in here, right in that area of around 84. You don't see much more activity. It actually went a little bit lower than that. We'll show you that in a minute. But why? What's the reason behind that? Well, if you go back far enough and you look at this profile that takes us back 6 months ago into July. In July, the point of control was at 1983.75. Now, we didn't quite hit that today, but that's where your point of control is. So you can rest assured that we're going to be coming down to that. On the Dow, on the other hand, the upper value area from the period of May forward, May of 2014, that upper value area was at 17,368, and you moved up to 580. It's coming down. It's got to test that, and as the ES continued to plunge lower, we didn't really see any area of support on the Dow until we get into this area of real low volume right in here. And sure enough, the Dow moves all the way down to 17,262 today. Okay, so almost there. We've got a little ways to go. So the writing's on the wall. You can see exactly where this is liable to find some measure of support before we resume any kind of meaningful rally. We got a ways to go. Now, let's go ahead and take a look at some meaningful trades that we could glean by just watching the premium. No other indicator but just the premium itself. Now, this is a 5-second bar chart on the ES and 5-second on the premium. We have two lines in here. These are what we refer to as threshold lines. Suffice to say, above the threshold line, we expect the market will resume a rally back up to prices associated with where the premium was above that line. If we drop below it, we usually see a short. If the market drops below the lower threshold, we expect the market will continue to move down or return to that price later on. If it is above the line, that's the threshold of the premium where we can anticipate something of a rally, so long as there's some divergence there. So as the market moved up to its first high within the first few minutes of the day, we noticed that the premium is dropping off here below the threshold line, and down we come. Now watch what happens as the market begins to make this move up. We get a slight pivot here, and another one here, and another one here. On each of these consecutively higher high pivots, you have lower lows on the premium. That's predictive. So as the market continues to move up, watch the highs of the premium. We move above the threshold line. We're still moving higher. We finally move higher. Premium is lower, and we're ready to drop. Just prior to that drop, look again at these lows. Here, here, and here. We have lower lows on the premium, but higher lows on the Spoos. Again, we're ready for a drop. So what happens? We finally get to the point of being overbought. The premium is hit. The highs of the premium are lower highs right in here, and down she comes. Predicted by that bar here, we can expect this drop to go at least that far. When it finally does, immediately upon hitting that price, the premium comes down once again. That's pretty much how this works. Let's take a look at just a couple of more trades. As the market comes down and hits that big low on the premium right there, the premium bounces up above the threshold line right here, leaving this bar as a predictive of where the market is going to return. Sure enough, we come down, but as we hit these lows in here, we're at higher lows on the premium. Market goes up. As it moves up to this high, where are we at again? We're above our threshold line. We're continuing to move up. As soon as we finally hit that price, what happens again? Within just a few moments, we get new highs on the premium. So this thing is going to continue to climb. And as it does, we finally reach that threshold level right in there at 2350, and we are above the threshold once again at that particular moment. Now we have a divergence in here, and the market begins to drop a little bit. Was there anything to indicate how far down this might come as it rallies up? Well, yes, indeed. You have that right in here. Okay, right there. That bar, right there. Because what's happened to the premium? Just like we looked at here, notice what's happening here. We'll just reset this time to 9:08. And you'll notice low bar on the premium here, lower low here, but a lower low there, but a higher low on the Spoos. We're going to be coming right back down. So when we finally reach that point, right there, we hit our high of 2350, and we can expect this market is going to start to drop. But notice what occurs. We only come down a little bit. We get lower lows on the premium again. Here compared to here, that's a lower low. Forecasting this drop once again. But once you hit this price one more time, look at where the premium is. This is your premium bar here. And when you test it here, the premium is now on the last bar at 23.50 below our threshold. That's it. Down she comes. And how far does she go? Well, we already know that. But that price down here, no problem at all. Predicted earlier. And a really pretty nice short without even thinking too much about where this is going. All right. Then as it finally comes down and hits this initial low, here the premium is easily going lower, so there's not much here that's going to hold this thing up, and we continue to drop. So that big bar on the premium further foretelling new lows. Market rebounds just a bit. As it does, look at these lows on the premium here compared to in here. Lower low on the premium, higher low on the Spoos. We move up a little bit higher. Premium becomes divergent. Down she goes again. And we just keep on getting the market moving lower. We could go through the rest of the day using the same general pattern, and you'd be able to see how the premium predicts the moves of the Spoos before they ever get there. If you don't know how to learn, if you don't know how to read the premium, please learn it. Come to us, we'll teach you. That's our business, and you will become a better trader. This is Rod Kusin and the Spoo Man for Risk.